What's going on, YouTube? Coming back with another video. I just dropped another video yesterday about getting mentally prepared for the game, and today we're gonna talk about understanding the terminology of the game. I know y'all probably ready to get into the juicy stuff and try to, how to read charts, how to start making money, but bear with me. You know what I'm saying? I gotta build it up step by step so you understand everything. So right now, I'm gonna just break down keywords and like the terminology we use as traders, because once you join the stock community, you start to notice that we use certain words and certain vocabulary that you might not understand unless you've been in the game for a long time. So it's important to learn the terminology before I start teaching how to read candles and entries and all that, if you don't even understand what I'm saying. You know what I'm saying? So I got the mental game down. Now let's go ahead and get into the vocabulary. The first two vocab words I'm gonna throw at you is bullish and bearish. I'm pretty sure y'all probably heard that before if you've been in the Discord for a couple months or a couple days now. Bullish just means you on the side of the train where you think the stock finna go up. If you are bearish, that means you on the side of the train where you think the stock gonna go down. And usually people who are bullish got calls, because calls means you are in a contract where you get paid if the stock goes up. And bears are usually in puts, which is, puts are people who are wishing that the stock goes down or think the stock is going to go down because they get paid as the stock crashes. So yeah, it kind of plays hand in hand. So also you can hear the word bull. I'm a bull or I'm a bear, just shortened for bullish or bearish. And calls and puts play hand in hand with bulls and bears, because usually, like I said, bullish people got calls, bearish people usually got puts. So if you go on Stock Twits, the app we told you to download, you will see people using the word bullish and bearish a lot. The next vocab word I got for y'all is day trade, swing trade, and leaps. So a day trade, we usually call these out in the call out section, and you can tell it's a day trade by the date of the contract. So if today was October 1st, let's just say today was October 1st, and I call out a play and the play expires October 1st, that's probably a day trade, meaning that this play is only meant to be held today only. So get in, get out. A swing trade usually means we are holding the stock for, it could be a couple weeks, couple months, usually around that time frame. And you'll be able to tell if it's a swing trade by the date as well. Like I said, if it's October 1st, and we call out a play that expires like October 31st or October 20th, that's a swing trade, meaning that if the play pop off now, you can sell it or you can continue to hold it for longer because the contracts still got time on them. A swing trade doesn't mean that you always have to hold it the whole time. If the play pop off, you can sell at any time. But the swing trade is just to give you more time so you can relax at work. Also, it's just better for, people who got bad entries. And also it's better for people who ain't got time to look at their phone all day. And then a leap is a play where you hold it for over 6 months to a year. So like a super long play, kind of like a long-term investment with contracts. So if you think Apple gonna end up hitting 300 later in the next 2 years or so, you can buy a leap contract where you just buy that, put your phone down, and let it chill. So each play has their own paths, each play has their own execution methods, each play has their own way of going into them. So make sure you know the difference between swing trade, day trade, and the leap. The next vocab words I have is price target and stop loss. So a price target, so once you enter a trade, you should already have a mental note of where you would like to sell at. If you are not doing that while you're trading, then you're already doing something wrong, because that means you're going into a trade with no expectations. So every time you get into a trade, you should have a point where you're like, okay, I'm gonna sell here, and that's your price target. So every play I enter, I know the range I'm gonna sell at, my price target. And a stop loss is basically to save your money from getting wiped clean. So let's say you got $800 you put into a play, and the most you want to lose is $200. So you put that stop loss just in case the stock decides to tank on you. It stops right there instead of just going all the way through. You know what I'm saying? So a stop loss is kind of like insurance. Like, hey, if this price gets this low, just sell it for me automatically. And you can also do that to your selling point as well. If you want to sell your stock at a certain point, it can trigger at a certain point as well. I will have a video coming out about how to set your stop loss. But a stop loss is basically like a place where you want the stock to sell your contracts at. Next thing I got is 200 EMA, 20 EMA. So this is kind of like something I got to show you on the chart. But basically, it's that yellow line that goes across your screen. So the 200 EMA is the average moving point the past 200 days. So you know how when LeBron, you know, he has an average, like his points. Like this season, he averaging like 20 points a game. So if a stock is trading above the 200 EMA, that means it's doing better than it's used to doing. If it's below the 200 EMA, that means the stock is kind of underperforming the usual. And you know what I'm saying? So when you see a stock break above the 200 EMA, that means, oh, it's doing something it doesn't usually do, it's going higher. Or if it go lower, it's doing something it's not usually doing, which is going lower. Which is why that's a good thing to have on your chart, so you can see like where the stock stands in the past 200 days. Is it doing better than it usually do or worse? And then you have a 20 EMA, which is the same thing, just shorter time frame. Instead of the 200-day moving average, it's the 20-day. So the past 20 days, the average. You know what I'm saying? They both are the same thing. One is just more for a shorter time frame, and one is for a bigger. And this one is also a common one, support and resistance. So the support and resistance is key when trading stocks. So a resistance point is like the area where a stock always goes to and shoot back down. Like the stock cannot get past this point. That's a resistance point. But if you see a stock finally get past resistance, that's a good sign for calls, because that means, oh, it finally broke through that ceiling. It took forever to get past. And support is where a stock usually bounces off of. So you might see it go there and bounce right back up. It might go there and bounce right back up. And this is a good thing for puts, because if it breaks the support zone, if it goes through the floor, that might mean, oh, there's no more support right there. So it might go lower, and then you went into puts. So that's kind of what support and resistance means. It lets you know like the points it can't break through and the points it usually bounces off of. And like you can use these things to make decisions on calls and puts. And this is another one I want to touch on too, is IV crush. This is kind of involved with contracts, and it usually happens on like earning gambles, stuff like that. So IV crush basically means your contracts have turned worthless. So imagine there was some silver shoes that everybody in school wanted, right? And like you got them and you decided to buy them. At the moment, everybody wants them, right? But let's say tomorrow the CEO says those shoes carry diseases. The next day at school, no one wants those shoes. So those shoes have been IV crushed, which means they went from really valuable to worth nothing. And that usually happens during earning gambles. If you like gamble on earnings, your contracts can go from being worth something to worth nothing based on the price movement of the stock after earnings. Because you know, earnings, the stock either tanks or goes up or does nothing. And usually the IV crush hits the hardest when the stock just does nothing. And that's what being IV crush means. Your contracts have like plummeted in value because the stock decided not to move. You know what I'm saying? So and then another thing I want to touch on is theta. So theta is kind of like time decay. So like I said, every contract has a date where it expires. So the closer you get to that expiration date, time decay is eating away at your money, because the closer you get to the contracts, to the expiration point, the less valuable your contracts are, because your contracts are being bought by other people. And who wants to hold a contract that expires tomorrow? You know what I'm saying? So it's kind of like having spoiled milk in your hands. You know what I'm saying? Like, yeah, the first couple of days of you buying that milk, it has value, right? But the closer it gets to being spoiled, no one wants to use that milk anymore. So that's kind of what theta is, the time decay over time. And theta kind of hits you the hardest when the stock is not moving and it kind of just goes straight. And also time decay hits you the most when and doing day trades too, because like I said, the contracts expired that day. So time is like ticking. It's kind of like a bomb, you know what I'm saying? And then this one is kind of easy, pre-market high, low. So the pre-market is the time period right before the market opens, depending on your time zone. So the market usually like moves overnight, but you can't officially trade until the market opens up. that time period is the pre-market. So when you hear pre-market high and low, the high is the highest point the stock went in pre-market, and pre-market low is the lowest point the stock went in pre-market. And you can kind of mark those. There's a strategy out there, the pre-market high-low strategy, where you like mark the high and low and you wait for it to get broke. So you kind of see which one get taken out first, and you kind of make your trades based on like if it breaks through the pre-market high first or the low first. You know what I'm saying? There's many ways to make money in the stock game based on pre-market high and lows. This one's kind of easy as well. AH, after hours. That's the time period after the market has closed. You can't trade during that time either. You kind of have to just spectate and watch. If you are gambling on an earnings play, most of them are after hours. So once your money is locked in, you got to just sit there and watch what the stock does after hours. You know what I'm saying? And then the last vocab words I got for you is shares and contracts. So when you're buying shares, you can hold shares forever. Like I can buy shares at Apple right now, and like nothing, like it, like I own the company. Well, I own a small piece of the company now because I bought shares, and you can hold shares forever. Usually long-term investments, people like to buy shares. And contracts are option trading, which is what we kind of mainly focus on in the Discord. Is like I said, it has an expiration date. You buy and sell contracts, theta. You have it's on steroids. It's like kind of buying shares on steroids because the money moves quicker. You can lose money quicker. The contracts lose value, gain value quicker. So shares and buying contracts are two different games. Make sure you know the difference between shares and contracts. But I think those are the main vocab words that I'm gonna touch on today. There's probably more y'all will learn over time, but this right here is a good like foundation for you to know. My next video, I will be getting into strategies and things of that nature, but I wanted to knock out the mental game and the vocab first, because once you got them two things down, it'll make it easier when I start talking about the other stuff. But leave a like, comment, subscribe, man. Let me know if y'all liking these videos. Is it making things make more sense? Let me know. I'll see y'all in the next video. Boom, I'm in the NASCAR. We know your history.